Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at stablecoins and their impact on the crypto markets. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source of Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now, we're just here on the Bitcoin price live page here on lookintobitcoin.com. And as we can see, as I film this, last 24 hours has been fairly meh for Bitcoin. Nothing great, nothing too terrible either. Overall, the past few weeks and months have been, again, not great, pretty average. Obviously, we'd like things to be a little better, but ultimately, considering we were in a bear market for a year, I'll take it. But one thing we need to consider is recently, especially over the past few years, the rise in popularity of stablecoins or cryptocurrencies that are pegged to the price of fiat currencies such as the US dollar have absolutely exploded in popularity, usage, and prevalence, not only within the crypto markets but on a global scale. So, how do these actually impact the crypto markets? Are they a good thing for the crypto space, or should we maybe be a little bit wary about where they're potentially taking us and the crypto markets? So, if I just go here onto TradingView, we can see here I've just loaded up the standard BTC USD chart on the daily time frame, and as we can see over the last few years, things have been pretty up and down, but compared to where we were a few months ago, again, not going to complain, especially if we get a decent bull cycle, which it looks like we may be kicking off, but I don't want to get too excited about that right now. If we load up, what I've added here is the three largest stable coins and their dominance on the crypto market. So the three largest stable coins being USDT, USDC, and DAI. So what I've done here is these three tickers. If you add just .d at the end, it adds the dominance of the crypto markets. And altogether, these have a total dominance of the crypto market. So the amount of the total crypto market cap that they make up is around 10.89%. Now, this is significantly higher than the just about 1% we were only 4 years ago. That's a huge increase in popularity. If I just hide the BTC chart here and add in the total crypto market cap, we can see again it's very similar to the BTC chart, but there is an almost one-to-one inverse correlation. When people buy stablecoins, when people trade their assets into stablecoins, this usually coincides with prices of cryptocurrencies decreasing. Now, of course, this might make logical sense because as people are trading and they want to exit the crypto markets, the most easy way to do that is to transfer into these stablecoins, which are cryptocurrency, which can be traded very quickly and easily and sent in a decentralized peer-to-peer manner, at least for the time being, that is. So it makes sense for people to move from currencies like Bitcoin, maybe even Ethereum, into stablecoins. But one thing we need to acknowledge is as the underlying dominance of these stablecoins is increasing, it's maybe limiting the upside potential we have for cryptocurrencies. Because previously, if people were going to USDT or other stablecoins to potentially lock in some profits before their anticipated decrease in the underlying price of the asset, this wasn't too much of an issue because the stablecoin dominance in the market was only a couple percent. Previously, maybe people wouldn't even rotate into stablecoins, they'd rotate into other assets like Bitcoin, which is a less volatile but still correlated asset within the digital asset industry. But the fact that now people are considerably more likely to rotate their assets into stablecoins maybe makes them less likely to rotate back into digital assets and cryptocurrencies. Maybe the ease and use of stablecoins maybe makes people not want to maybe invest in cryptocurrencies. Of course, stablecoins have their slight ups and downs as they may temporarily lose the peg, or if you are invested in certain stablecoins last year, maybe they lost all of their value. But especially along these large ones, they usually keep their peg pretty close. So they're usually very close to what their underlying price is trying to be, which in this instance is $1. So maybe people just see this ease, see the stability and the not losing 70-80% of your underlying capital by holding these stablecoins compared to speculative crypto assets. So the fact that this dominance has risen exponentially, it's 10 times in just a few years, maybe is a slight cause for concern. What we can do here is if we just remove this, is add on the underlying size of these stablecoins. We can see, again, very similar to the dominance chart, that this has increased, but we can see that the actual amount of stablecoins almost never decreases. We can see that the amount of stable coins just a few years ago were just a few billion, but now it's well over $100 billion as sat in stable coins. And while this has decreased slightly, if you look at the actual underlying market of the cryptocurrency industry, we can see this peaked at just under $3 trillion for the entire crypto market cap, and then bottomed most recently at around $700 billion. So the fact that the stablecoin markets has risen from just a few billion to well over 100 billion with very little signs of slowing down, just a few billion swings here and there, compared to the underlying crypto market as a whole, which has had a few $trillion swings. Maybe this is taking out some of the volatility and speculative nature of the crypto markets that can lead to these exponential rises in price. Maybe people are being a little bit more conservative now that there is a very easy way to move money from these speculative assets into a fiat pegged stablecoin. What we can also see is if we add on the BTC dominance, it's a very similar story if we just go back onto the USDT and other stablecoin dominance. If we just move the chart here, we can see the Bitcoin dominance, which is the total crypto market cap made solely of Bitcoin, has been very stagnant for a few years now, with the rise in prominence of different altcoins and people just trying to maximize their profits by potentially investing and trading more speculative, pump and dump, let's be frank, pretty useless cryptocurrencies out there. It's maybe again limiting the upside we'll see in Bitcoin because the market is being diluted by these other altcoins and stablecoins which are flooding the market. Some may also see these stablecoins as almost a proof of concept for these central bank digital currencies. Now, if you weren't already aware of this term, basically countries and governments around the world are exploring the idea of distributing their own currency, these own cryptocurrency, which are pegged to their own national currency. So this one here is specifically by the Bank of England exploring a UK CBDC, which would be pegged to the Great British Pound. Now, this is a pretty alarming topic and a lot of people aren't too happy about the situation because currently transactions can take place with physical money, coins, notes, or through traditional means such as banks if you're transferring money, or like we like to maybe make transactions using cryptocurrencies, but there is still some privacy and anonymity by using physical cash to maybe buy certain assets. But with a central bank digital currency, having your government control all of your money is quite a scary thought for people. And the fact that these stablecoins are proving to be very popular, are proving to work, is giving governments a little bit more incentive to maybe explore the option to launch their own CBDC, which ultimately is a pretty bad thing for the crypto markets and Bitcoin in general. So just to summarize, the rise in stablecoin usage has definitely contributed to the overall crypto market cap and wider adoption of cryptocurrencies. Like I said, if someone's just exploring cryptocurrencies for the first time, the easiest way to really use them, get the hang of things, may be to use a fiat currency pegged stablecoin like the US dollar, because everyone has a general idea and concept of what a fiat currency does. I'm sure all of you have used fiat currencies thousands of times in whatever country you're watching from because they are easy to use. So it has definitely contributed as a way for people to get their foot in the door and use cryptocurrencies for the first time. And why stablecoins like USDT definitely have a place and purpose within the space, like we said, even if it's just for the ease of use for trading and investing to get out of these speculative cryptocurrency trades and investments that we may hold, it may be against the original purpose of cryptos to have a use case and price tied to fiat currencies. Ultimately, Bitcoin was created almost in spite of the traditional finance system and to try and provide a truly decentralized peer-to-peer currency with no central authority or ownership. And these fiat currencies are definitely very much against that. This adoption may lead to more strict central bank digital currencies and may remove liquidity from real cryptos like Bitcoin. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know in the comments down below and on social media, do you use stablecoins such as USDT, USDC, or DAI? What do you think about these stablecoins and potentially leading to CBDCs in the future? Or are you a pure Bitcoin or real cryptocurrency maximalist and refuse to use these? If so, let me know in the comments down below and let me know your general thoughts on the markets right now. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.